Hi, this is Dan Collins, Editor-in-Chief of Modern Trader Magazine, coming to you live from the Florida CME Group for Traders Exclusive on Thursday, August 27th. Wow, who would think that a unexpected bullish GDP number would lead to less volatile markets? But that's kind of what we've seen today, as after yesterday's recovery in equities, positive news, markets rallied a bit, but not a whole lot. It's really a quandary, and if you look at the futuresmag.com website, I put out a piece yesterday talking about, you know, what the Fed will do now. If you've seen it after Sunday's massive sell-off and the correction that we've seen in the last week, people are saying, well, the Fed needs to step back from the September rate hike everyone expected, and even some Fed officials had hinted towards that. But it raises a question. There's been pain involved with this 3-year process of tapering and whether tapering is tightening and tightening. So the market's going to react poorly to this regardless. So do we want to delay and go through it all over again? And I'd say the Fed doesn't want to and the market doesn't want to. Now that depends on what you think has pushed this. There's a story in Reuters this morning where citing Chinese central bank officials that said, hey, don't blame this sell-off on the devaluation of the yuan. It's the anticipation of a Fed rate hike. Whether that's true or not, it's probably not the tightening, it's probably the weakness in the Chinese market. It certainly did affect it. They put forward the argument that this tightening that the Fed will do, or it's expected to do, is what led to that weakness, is what led to the weakness in the emerging markets, and they're saying the Fed needs to hold off. As I said, there's going to be a reaction when it comes, and I think it's probably better to get it over with, especially now you went through this pain. How much you want to attribute it to, last week we had some positive numbers, and in a lot of people's mind that kind of locked in the September increase. Now with GDP coming out for the second quarter at 3.7%, I think the Fed will be hard pressed to come back and hold off. And it's this sword of Damocles that's been hanging over the market for so long. So once again, I said they should get over, they should get it over with and tighten in September. I think the second quarter GDP number will give them, cover to do that. This has been Dan Collins for Traders Exclusive. See you next time.